Jobs and inflation data take center stage in December, but first, Fed Chair Powell came out at the end of the month and roiled markets in the best way possible, setting the stage for a much improved December. So first I have the 10-year Treasury. Now, I wanted to do a quick comparison here. So this is the last year on the 10-year Treasury, and we get on Thursdays, which December 1st, we've got the numbers from Freddie Mac on mortgage rates. So came in, their survey started at the beginning of the week and was issued today before the data came out yesterday and this morning with personal consumption and expenditure, which we'll talk about. But look at this chart from December of last year. You can see mortgage rates around 3% and the climb until June 23rd, and then it fell. And then the height of things when it hit just over 7% at the beginning of November and has taken a significant dip back. So on that, look at the 10-year. That was pretty low back last year and jumped to right around that same time period we talked about in mid-June, fell back, and then the 10-year actually spiked and hit the high point in October, again spiked in early November, and has since much improved. So let's look at that. Yesterday, we had, first of this month, November 10th, we had CPI inflation reports. Today, we had personal consumption expenditure, but before that report came out, the Fed chairman came and did an interview yesterday, and stock market soared in the late afternoon after his comments, where he's recognized that there is likely a recession coming at the expense of the American people from their policies. So with that, he acknowledged that they're likely going to slow down the pace of rate hikes. So we saw a huge drop on the 10-year, dropping below this Fibonacci retracement line. Today, we're just dancing right along the next level, far below the 50-day average. We still have 100-day, 200-day averages far below. So we're definitely way above the averages for the longer run. But mortgage-backed securities also took a huge improvement yesterday. So these are the prices to the mortgage-backed securities. The green would be good here. The reverse happened on November 10th. The price went up. Interest rates came down like we just looked at. And look at this huge jump yesterday, getting above the 100-day average. Starting today off, it's soared higher. It's settling down, but we are looking steady in eyes of the traders that are buying these mortgage-backed securities. On Friday, we get the jobs report. So this will be for the month of November, first Friday of every month. That could be the next pivotal move to really implant what's going to be the future of Fed policies. We'll see that come out in the middle of December with a consumer price index following the same week in the mid-December. So we'll keep an eye on that for you and see you next week.